Peter. Thank you very much for taking the time to meet with me today in your offices in Boston. So I realized that I first spoke with you in 2011. Could you please first introduce yourself and maybe share with us the key milestones of your successful professional career?
Sure. Well, first of all, Louis, welcome to Boston. It's a pleasure to see you again, and it's a privilege to be partnering with you. I joined Summit in 1994 directly from business school, and I've been located in Silicon Valley for the entirety of my career as a technology investor. Along the way, I've also held a number of leadership roles at the firm. We ran the firm with an executive committee of partners after we transitioned from our founders, and I was a member of that committee for 9 years, and then in the beginning of 2015, I became the CEO of the firm.
What is your role today at Summit?
Well, I typically answer that question by saying that serving as the CEO of a partnership is very different than serving as the CEO of a company. I'm a managing director, I'm a partner of the firm, but I'm also responsible for leading the firm, and that really consists of a number of different sub-roles, one of which is, of course, firm strategy. I am also generally in charge of personnel and compensation, and also with investor relations as an important time allocation. I also serve as the chief investment officer of the firm, so I chair all of our deal-by-deal investment committees.
And could you please introduce your firm, Summit Partners, and its history to us?
Sure. Well, the firm was founded in 1984 by Roe Stamps, Steve Woodsum, and Greg Avis on the simple belief that profitable growth is the most reliable source of superior risk-adjusted returns through market and economic cycles. They built the firm around that belief and added to it a very important dimension, which is proprietary sourcing and idea generation. Over time, that our firm has evolved quite a bit along with the industry in the intervening 40 years. And while our strategy is still founded on this basic belief, much of what we do, almost everything that we do, has evolved to meet the changing environment in which we invest today.
And could you describe your investment strategy and explain what growth buyout, growth equity strategy is for Summit Partners?
We have the flexibility to tailor a transaction that meets the needs of that specific enterprise. While our origins were as minority growth equity investors, we developed the ability to execute levered control transactions almost 30 years ago. So today, we have a flexible approach to deal structuring, all of which allows us to meet, as I said, the needs of the specific company, to execute an investment thesis in that company's category.
And Summit Partners is one of the pioneers of the cold calling sourcing approach. Could you please explain what it is and how your sourcing approach has evolved over time?
So when I joined the firm in 1994, the firm was 10 years old, and in many ways it had developed the ability to create an informational asymmetry. At the time, there were very few firms going directly to companies trying to manufacture investment opportunities. So by doing so, by building a strategy and a team and a process to originate investments directly, we could create this informational asymmetry. Now, over time, because that strategy worked well, it's been very widely emulated. And when we first met in 2011, we were in the process of evolving that strategy in several ways. The first is today our direct sourcing and idea generation is largely thematic. In other words, it's driven by the most experienced investors at the firm who have their perspectives on emerging secular growth trends, and those investors work very closely with our younger staff to map markets and develop and identify investment opportunities. Today it's also technology enabled, which was loosely the case 30 years ago. We have built our own software platform. It's a business intelligence and workflow platform that we call Alpha 5. And that allows us to be more efficient and more automated in the process of sourcing and idea generation. But indeed, if you consider the process by which we originate ideas, we've taken the historical approach of direct sourcing and turned it on its side and really made it partner-led, thematic, and technology-enabled.
And could you please maybe give us some examples of the most attractive subsectors you are currently targeting for investment?
Sure. Well, we are organized today into 3 distinct industry sector teams, technology, healthcare, and the third sector we call growth products and services, or GPS. That GPS team is covering 4 different subsectors: consumer, industrial technology, business services, and fintech and financial services. So within each of the 3, there are, of course, interesting sector themes, and they're constantly evolving. But if I were to name a couple within each industry sector, in technology, we split our technology team into an applications team and an infrastructure team. And within applications, I think there's a general trend away from best of breed and towards more platform companies. This is in the enterprise software world. This is very typical of what you see when cost of capital goes up, the economy softens, and the enterprise buyer becomes much more selective. So we're really looking for companies that will disrupt and grow profitably in that general environment. Also in the application sector, we have made 2 investments against a broader theme of privacy, specifically in the context of digital advertising. And so, of course, Apple, as most folks know, changed the privacy rules on their devices. This had a pretty meaningful effect on the profitability and efficiency of online advertising. And as a result, we saw a diversion of ad dollars away from the so-called walled gardens towards the open internet and the creator economy and so forth. And we've made 2 investments in that, leveraged against that overall trend. In infrastructure, we see quite an interesting opportunity in AI infrastructure. There is quite some meaningful CapEx associated with the rebuild of the network, broadly defined, to suit the needs of AI-based or AI-native applications. And we're at the beginning of this trend, we think, and we're starting to see some interesting opportunities develop there. In healthcare, we continue to have a very strong focus on value-based care. Our first investment in value-based care was in 2005. And while it's a dynamic environment in healthcare services, we still think there's a very interesting opportunity there, as well as in categories like gene sequencing and personalized medicine, and also in the veterinary sector, where we've also been a very long tenured investor. In the GPS category, we continue to see innovation in payments and in the financial sector. In the consumer space, we've shifted our approach. 10 years ago, we began identifying rapidly growing digitally native brands that were marketed primarily through social media, going direct to customers. Of course, with the aforementioned changes in the digital advertising market, those strategies have shifted. Our team has adjusted their focus in the consumer sector to necessary services paid by insurance. So we've recently acquired a chain of auto collision repair shops, and also are building a super regional provider of residential and commercial remediation services.
And your firm has successfully managed 2 senior management transitions. And your senior management continues to be very stable, seasoned, with a long common working experience. What do you think makes a private equity firm like Summit still successful after 40 years of existence? What are the key factors?
Well, in many ways, it goes back to the origin story of the firm. I've heard Ro and Steve say many times that when they started the firm, they didn't put their names on the door. They wanted to build an institution that would endure and prosper well past their active tenures, and of course they've been successful in that respect. But I think there's also a culture around the firm that reinforces both the embrace and the discipline around the execution of our strategy, but also around the view of the firm as an institution and the obligation to make decisions in furtherance of the next 40 years of our firm's history. And it's difficult to say, of course. I've only worked here, so I don't have much perspective on other firms, but this is very much the approach here at Summit.
And turning maybe to the market environment, what's your perspective on the current market environment, and do you think it's a good time to invest?
as far as the market environment is concerned, I think it's important to put it into the context of perhaps a much longer time horizon. We've been referencing the fact that we're no longer in the zero interest rate policy. Indeed, with a longer term perspective, you see that interest rates have been falling in the United States for 40 years. And so with the end of that era, we think we'll see some mean reversion perhaps in both allocations of private equity, performance of the asset class, and also greater dispersion amongst managers and amongst or within categories. And long term, while this is not particularly pleasant, we think it's necessary and healthy for the industry to continue. So I think that looking ahead, I still see a very bright future for growth equity and for private equity as a whole, but the asset class and the investors will become much more discerning. I think the composition of that asset class may evolve because there will be winners and losers, and that's okay. I mean, I think that's the history of our business, is that it's a very competitive business, and one must continuously improve and evolve in order to maintain their space.
You've already partially answered my next question, but how do you see the private equity industry evolve over the medium to long term?
Well, as just stated, I think the asset class will continue to grow. Will it double or triple from today's current size? Perhaps. I think there is generally a view that the average retail investor will enter the asset class. There are some products being developed to allow retail investors to enter that asset class, but indeed that's quite a different business. But the needs of very sophisticated institutional investors, very large and sophisticated institutional investors, can be quite different than those of the retail investor. And it's not clear to me that one can serve all masters.
Thank you very much, Peter, for your time today, for talking about yourself, Summit Partners, and sharing your insight about the private equity market. Really appreciate it.
It's been my pleasure. Thank you very much.